the difference in your description is that today, when a market moves because of a spoof, it can move a lot more.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and a video today about the latest spoof. In fact, I'm actually going to whisper for the rest of the video so that we don't wake up the regulators. Or maybe, actually, no, we'll talk in a regular voice. I won't whisper because I think the CFTC is there. They're probably on coffee break, but it was fun about 6:30 or so Denver time here. Take a look at the silver price. And you see it just drops randomly for about almost 40 cents there. It was down 45 cents a little bit ago. Has rebounded quite a bit. And how about picking on the silver bugs? I mean, look at gold. I guess it's down a little bit, but gee, come on now. But again, keep in mind that we do have an investigation going on where JP Morgan's metals desk, which includes gold and silver, was a criminal enterprise, U.S. says. Again, RICO statute is rarely used in cases involving big banks, although based on everything I've seen, the behavior certainly fits a mafia-like organization. If anyone would like to challenge that or debate that, send me a message. I mean, maybe I'm missing something, but so it makes you wonder what happens because on one hand, Department of Justice getting guilty confessions of traders who have spoofed. And what's interesting is that, now, do I think that's the heart of the issue of what's going on here in silver? No. But what's interesting is that Bart Chilton, who was a former CFTC commissioner during the agency's investigation into silver manipulation, when after 4 years, the front statement was that they found nothing, despite the fact that now the Department of Justice has confirmed they were wrong on that. Because they're the dates where these traders that they have gotten guilty confessions from, who I might add also said it was widespread practice at their firm and done with the knowledge of their supervisors to boot. And you actually saw a similar statement from all of them. And so here's Bart Chilton, you know, confirming what the Department of Justice is confirming. The only thing that's bizarre to me is that it happens again here. But let's hear it in Bart's words to hear exactly how he defines a spoof, and then we'll come back to this chart.
Appreciate you mentioning the spoofing. Curious, because my understanding of how some of the manipulation has occurred is that, you know, if silver is trading $20.05, there's a lot of stop orders placed around the $20 handle. So often if the price can get pushed a little bit, then you get a lot of those high frequency algorithms kicking in, and then you'll see a drop with many feeling that people kind of nudging a little are then able to buy lower. Does that sound like a reasonably accurate portrayal to put it in perspective to folks, or would you phrase it differently?
Well, it's a good portrayal, but it's a very good portrayal. But it's actually also a reflection of what I was just speaking about, of how trading has changed. So even back in 2008, 9, 10, maybe a little bit of 11, even when a lot of these silver trades and some gold trades were pretty suspect when you're looking at them, you didn't have high frequency traders in these markets like you do today.
Right.
And they're still not all over them, but spoofing meant one thing when it was, you know, an average person out there, you know, saying they're going to sell 100 lots of something and trying to tick the price up a penny, and then once it goes up, then they offer, you know, half a penny. Mm-hmm. If they get it to go up a penny, they offer half a penny, and they make a half a penny where they weren't going to make anything. And then they pull back those other offers for a penny, right? So they say, I'll sell these things for a penny more than anybody else is offering. And the price ticks up, and a couple of people may take advantage, but then they pull back the offer real quick. And then they say, now I'll sell it for this amount. And they get a bunch of buyers. So markets are changing, and so you have these high-frequency traders who are getting into more and more areas. And at first, they weren't into futures, they weren't into commodities, but now they're getting into them, particularly oil, some of the larger trader T-bills, and they're getting into gold and silver. Less so like pork bellies and live cattle and stuff, but what they want is volume. High-frequency traders, I call them cheetahs, not because they're like Boston card cheaters, but because they're fast, like the market cheetahs, right. Cheetahs in the jungle. And they're trying to prey upon any little time lapse that they can see, but they got to have volume to make those changes. And they serve a purpose, the cheetahs, because they add liquidity to markets. So if there's somebody who wants to buy or sell, cheetahs will take them. They'll do it. They're just going to offload it one way or another. In the meantime, and just they'll be so quick that they're trying to make just little micro pennies in nanoseconds. So the difference in your description is that today, when a market moves because of a spoof, it can move a lot more.
So I wonder if he's talking about something like May 1st, 2011. It's really April 29th, the Sunday night, when silver opened up at $48 and just dropped down to 42. And again, let's take one last look at today's silver chart, just lest you think you're imagining it, because it seems rather bizarre. And I wonder, and again, you have Ted Butler, who reports that on every time this has happened in Comex history, that JP Morgan is on the right side of the trade. I'd also point out that normally in markets, it's somewhat uncommon, or at least used to be, to see just a big plummet down like that, because you would think there must have been some news. And okay, so why don't we check the silver news? It's kind of interesting in silver, since it's a commodity, you don't really have, it's not like trading places where the crop report is coming out. And I mean, it's weird, because I think, where would I go? Is there some news I'm missing? I mean, I don't, sitting here talking about silver every day. But actually there was some news. So here are the silver ETFs like SLV. We see over the last 4 weeks, allegedly 48.5 million ounces going in there. So again, I love that clip of Ted Butler talking about how he felt the main driver of the move in 2011 was that 60 million ounces went in following QE2. So here's 48 million in a month. And as you know, that's just the tip of the iceberg. But maybe retail investors are selling their gold and silver. Oh, wait, no, that's not the case, as Andy Scheckman comes on and talks about every week. And I can confirm now that I've been doing orders for Miles Franklin as well, that people are calling and buying a lot of silver. I don't even get as many gold orders. So, but maybe the supply is, we've found a lot, and it's just, oh, wait, no, here's Jeff Clark. A great article, I might add, that we covered on Monday's show, talking about how new silver supply is drying up, not a little bit, but faster than Death Valley. Alrighty, there's, a whole bunch of charts and articles which we discussed the other day. So we'll leave that for now. Although maybe internationally it's changed. I don't know. Let's take a look at SRS Rocco, Steve St. Angelo. Couple of headlines here. Breaking news: Peru silver mine supply collapsed in April. All right. Major factor to invest in silver: 5 billion ounces of mine supply economically lost in the past decade. Could be worthwhile. And then chart. Well, no, not that one. Oh, and then of course, well, you'd think, okay, maybe. All right, maybe there's not as much silver, but the U.S. is reining in the debt. The financial system is going to get some stability. Although here we see U.S. total public debt increases a stunning $25 billion a day. A day. Wow. and actually, let's skip to this one since we're on national debt. I find it goes up almost $250 billion a week, at least when I check it. I remember when it was crossing 25 last month. Also interesting here, you see the dollar to silver ratio skyrocket. So I'm going to have to leave my mouse there. But if you look up to the middle, you'll see the definition. Basically, year over year increase in M2 money supply divided by the yearly production of silver in ounces. So it's interesting because I remember when I started looking at that a couple months ago, it was around 2,000 an ounce. So that's skyrocketing as you have demand surging and supply falling. But let's check. Oh, here's the debt chart. I mean, it was getting big, but has gone vertical. I don't know. Maybe the Fed's balance sheet will give us a nope. Printing money going vertical, but maybe the Comex will hold it together, possibly. But here we have Waiting on Comex Silver by Craig Hemke. Great article talks about how we just saw record gold deliveries, and now silver delivery month is coming up. Let's see. It looks like today's the 24th, so only about a week away or so. That should be fascinating. And you can hit the subscribe button and notification bell to stay posted on the action as that develops, because we'll have everyone in the silver market outside of Santa Claus on here discussing that. Perhaps it'll be like the Super Bowl of silver. In the end, I wonder what the CFTC is doing on days like that, if they've looked into any of these factors, if there's anyone in the regulators noticing that this seems a little odd. Can you check those trading records, see who sold there and who bought back there? And hey, maybe I'm imagining things, but when you have all the other evidence, including this, feels like it would be appropriate to comment. So unfortunately, I don't know if that will happen. My best guess is that this goes until the demand breaks the market. But if you want to know more about that and how all that stacks up, fortunately, I have some good news to share today, because after a long while and a lot of editing and other stuff, the big silver short print version now available on Amazon. There you go, the paperback, and that's what it looks like. You even got some Hunt Brothers on the cover there. I guess you can even read the darn thing or part of it. It was March of 2009, and little did I know how the financial world, financial markets, as well as my own life and career had just changed forever. And that's the beginning. Again, the book includes the interview with Bart Chilton, the interviews with Andrew Maguire, Rick Rule, David Morgan, really digging into why you saw the price drop so much, in basically why you saw that. Because to me, either that's clean and, silver just dropped while Bernanke was doing QE2 and nobody had any interest, which would dispute a lot of the other evidence presented in the book. But either that was natural, or if that was the result of just paper trading, that's why I've believed that you have at least something to that level, likely well beyond, in our near future. Book talks about how for every ounce of silver, there are probably 500 people who think they own it, probably well in excess of that. And then the last chapter, my favorite, which connects a lot of these different pieces, some things that I had never seen out there before that I found rather stunning and shared in the book. Although again, don't buy the book. I'll do you one better, because really the conclusion of everything in the book and how I tied some of them together, I thought was so important. I made a video of it for free. I mean, you can go buy the book. I think you'll like it. But if you want to know how all this fits together and what's coming, why it's coming, before it's coming, well, here you go.